Hey traders, Raghee here, and in this update we're going to talk about a question that I've been getting quite a bit as we have been progressing through what's been a pretty tricky December. So let's sort of mark where December 1 began, and then let's also take a look at the beginning of what we could consider the year-end rally is. Where is that sort of start date? And seasonally, sort of repetitively, it's right around Halloween. So we'll drop this line right here. Now, this is the first phase. Now, it wasn't awesome, but this is your first phase, which takes you to basically Thanksgiving, or right before Thanksgiving. So if we're taking a look at that fourth Thursday of November, that takes us to the 25th. So let's put that right around here. And about a week before that, so you can say about the 19th or 20th, so again, I think one of the exercises I do a lot, this is around earnings, this is around any significant OPEC central bank meeting, and even seasonals like this. I'll be dropping a lot of lines on my chart just to get an idea of where the ebb and flow is, whether it's the ebb and flow around a hot zone or a seasonal like what we're doing right now. So I know this is the start date, in terms of when I start looking for that year-end rally. So kind of green means go. In this area, about a week before Thanksgiving, we'll call this a caution because this is when we tend to see a little bit of a flattening out, then a pullback, right? And that usually goes into Thanksgiving. Now, normally out of Thanksgiving, we'll get that next move. So by around this time, or a couple days around Thanksgiving, I would look for it to continue again. And instead, if there's anything that can derail seasonal tendencies, it is news. Last Monday, Tuesday, so we're talking about the 29th and 30th, the last two trading days of November, Powell comes out and says, we are going to taper quicker, and we get really what would amount to a taper tantrum of, hey, wait a minute, Powell, we assumed this was the amount and this was the pace, and rate hikes are not basically a knee-jerk, mechanical, automatic expectation. Oh no, now, within a very short period of time, the market has had to digest June 2022 rate hikes. And this is where we're seeing a little bit more of a pronounced move lower. So here's the big question. The delay of this second phase. So again, if this was the first phase, that delay of the second phase, does that mean the whole year-end rally is off? And I'm looking at the S&P here. We can do the same thing with the NASDAQ. I don't believe so. I just think that the market needs a couple of days to digest that we knew the taper was coming. We knew rate hikes were eventually coming. We just now have to truncate that whole schedule timeline. But does it mean that we're completely bearish the markets? I don't believe so at all. So if this is then just a delayed second phase, that means we can continue on this trajectory till about the 20th of December. Now, what do I mean by that? Well, around this time, we'll see a little bit of a caution, meaning there could be another reason for the markets to have that second pullback after Christmas, all right? After Christmas, so call it about the 27th or so, we can say, green means go, and again, that would be the Santa rally that would take us just into the new year. All right, so that's the rhythm. Now, I'm not just throwing dates out there. You might say, okay, Rog, but where is the basis in this? We know you've been trading a minute. How many minutes are in 30 plus years? But why this observation? Well, when you take a composite over this period of time, basically the end of October to the beginning of January, and you look at it through the seasonal rhythms, this is what you have right here. And I'm going to zoom in a little bit so you can see it. This is what you have. Let's zoom in a little bit more. This is what you have right here. This is your hard right edge. So here's your end of October to December. All right. And then this is the rhythm we get. So you can see the pullback, and this is a 10-year rhythm. We can even look at the 5-year, which is a little bit different. This might get you wondering, Rog, are we really going to see a strong Santa rally? Let's not look. So let's use this 5-year composite. Let's not look for any real fireworks, but let's expect that we could rally into year end, which, by the way, that Santa rally really becomes part and parcel of the window dressing rally. Remember, at the very end of the year, we could see that tendency for the strong names and sectors in the market to get stronger. And this is where we'll dive into this more throughout the week, but which sectors and then which indices are connected to those sectors, and then which stocks are connected to both of them. That's how I'll build my watch list as I go into the end of the year. So I know this is a couple moving parts, but I hope this was helpful. This is the framework that I'll be taking into the early part of next year. If you have any questions and you're watching this on the Simpler Trading YouTube channel, feel free to leave a comment below, and we'll definitely get to those as far as what I'm looking at and why. And like I said, we'll follow up on this line of thought throughout this week. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.